Hello traders, welcome back. This is Julio Pinero. I'm doing today's midweek market focus. Today is the 16th of July 2014. I've got a few bullet points here as usual. Uh, First point is US market keeps on giving opportunities, wait for pullbacks and buy again. Next point is Fibonacci retracement and Fibonacci extensions. I'm gonna go through that in detail. Um, I've been asked by a few clients to go through the FIBs, so I decided to put it on today's midweek. Um, Next point is look for clarity. Yeah, look for clarity out there and increase your reward to risk ratio. All right. So those are the bullet points. I'll go back to my charts. Bear with me. There we go. Right. Right. So first of all, I'm gonna go through the Dow Jones, which comes as Wall Street on the ETX tickets. So this is it comes as Wall Street 30, I think it is. So this is a Dow Jones 30. And so basically, spend some time looking at this chart and see what you can see. What's the first thing that jumps out at you? What the market is going up, what the market is going down, trying to identify the cycles, um, and see what's happening there. Right, so can clearly see high highs and high lows, right? That's the first thing that jumps out, and it's on an uptrend as well, clearly. The EMAs are all aligned. You can see the EMAs here. That's the 20, that's the 50, and that's the 200. The colors are here, which is which. Market is giving high highs and high lows. You can also draw the phases or the cycles. So what I suggest to do if you don't have arrows here is to right click on it and put the color you like, put number 2 here and put an arrow here, and then click on default, save current settings and click OK. So there is phase 1, phase 2, phase 1, phase 2, phase 1, phase 2, and again phase 1, and then again phase 2, and then again phase 1, phase 2, phase 1, and so on and so on and so on. Yeah, so market is going up clearly, so we'll be looking for buying opportunities, obviously. Yeah, because you're gonna have more chances to win if you buy than if you sell. So leave the phase 2s alone and just get the phase 1s going up. That's an inside bar, beautiful entry, goes up, low test followed by another low test, goes up, low test followed by another low test, goes up. I mean, every time you get a low test and it happens to be bouncing off the 20 moving average as well, it just goes up. So it's pretty clear, and you can always put your trend lines up. So this will be your channel, your pattern. Now the channel is getting tweaked a little bit here in this section here, so I'm gonna put the channel here, and I'm going to delete these two. There we go. And actually I'm gonna take out a few lines because it's getting a bit too messy. Right, so that's a bit more precise in terms of what's happening now, taking into consideration the last few cycles. The other channel that I had was more like the bigger picture, you know, like all the way from the bottom. So this is more precise, looking at these cycles now. It is beautiful, it's still pushing up. I'm afraid I just finished coaching, it's 7 o'clock, and this midweek will be done by 8 today in the evening. Right, so that's pushing up. It's right at the top, so this market is gonna close in 2 hours. So by the look of things, it's gonna be a buyer bar. Great, so that's the Dow Jones, which is still giving historical highs, by the way. These 2 days, as we speak, is a historical high. Yeah, the highest point ever in history. It's happening again and again and again. So that is really good. Um, Next one, S&P. Very similar pattern. Maybe not as clean, but still clean. Still a pretty decent pattern here. Inside bar kicks off, low test, another low test kicks off, low test, another low test kicks off. So very similar, giving high highs and high lows. It's not as clean. It's not quite bouncing off the 20 moving average, just the last one. It is giving high highs and high lows, and so on. So it's not as clean. Um, it's still beautiful. What you can do is, if you haven't catch this move here, wait until it shoots up, wait until it pulls back down, and then look for buying opportunities again. Yeah, make sure you get a new high first. Yeah, so higher highs and higher lows, yeah, and then look for buying opportunities. Great. Um, Here it was giving convergence. So look, let's make sure. Yeah, convergence there. But here was giving divergence. So and also this pullback was much weaker than this pullback. It was much better pullback here. That's why it came down further down, like this one here came down further. Yeah. So just go back to the Dow Jones just to compare it quickly. It's pretty much identical. This is pushing up slightly. This is pushing down. This is pushing up here. It's giving convergence and convergence. Now so far as it is now, it's not giving convergence just yet because it is pushing down still. It will have to break through and take out this high here. So basically we have to go above 78, and then it's gonna give convergence. Okay. Right, let's go on to another one. The Russell mid caps are not doing as well. They're not doing as great. So this is what it's doing. There's the Russell 2000. There's a level up here and a level down there. So it's kind of ranging, to be honest with you. It's just messing about going up and down. And that's what we are now. So it's not as bullish as the Dow or the S&P. Kind of flattish. It was bullish for quite a while. Now it's kind of flattish and it looks a bit like a roller coaster, even the EMAs as well. Here's the German DAX, which is it lost the momentum a little bit. Yeah, similar to the FTSE. FTSE still not clear, still messing about, locked in here in this section. So we get nowhere near it. And why should you, if you have this beautiful chart giving high highs and high lows, and pulls back, give a low test, and then runs away again? So there's not reason to look for something else if you're looking to trade a stock index, a stock index. Let's move on to something else. Now we've got, let's go with Forex. Got Euro Pound here. Euro Pound keeps on giving lower highs and lower lows. Yeah. So there's Euro Pound giving lower highs and lower lows. I'm gonna put some lines up like that. Now I can copy and paste it. Put it down here. Beautiful chart pushing down. These are the turning points. Great trade on the 29th of May. Oh, that one. So that's a high test there. There's an inside bar followed by a high test. And these are bearish engulfing bar. These two bars here. Bearish engulfing bar. Okay. Still pushing down, giving new lows. Now right, this it was giving convergence here. Here was giving convergence as well. Here was giving, excuse me, there we go. Here was giving divergence, and as it is now, still not giving convergence. So if this carries on going down, That means that this is gonna push down a bit further, and then this is gonna give convergence. Okay. In that case, when it pulls back, look for selling opportunities once again. Bring it back down even further. Okay. If you haven't taken, if you're not on the move yet. These Euro Pound. These all for end of day trades, by the way. As you can see here is daily charts. It's for end of day patterns. Right, next one, Cat Swiss. Still going. Great. It's a great trade here, the inside bar, and a low test, and another low test, and another low test. That one, just looks like an inside bar, as long as the bar is inside the previous bar. So what we can do if you don't see it, bring the box up. So 83.32, same. So it's an inside bar. Yeah, this bar is inside this bar, or this bar here fits inside this bar. In other words, um, so that's a Cat Swiss. Still pushing up. I gave a low test. It wasn't giving convergence. Well, like you're looking at these two swing lows here, like that. These two swing highs, sorry, because you're looking at the highs for convergence. Yep. Alright, so getting convergence, getting back down. That's probably a 78.6 from here to there. Now let's start covering fibs now. Now that we went through a few charts, I'm just gonna do a quick recap. I'm just gonna basically go back and do the fibs. So that's actually it's a 618. Excuse me, it's from this previous swing low to the previous swing high. It's a 618, absolutely spot on. Yep. It wasn't giving convergence. So for those of you who have convergence as a must, then obviously you cannot take it. Yep. So it was giving fib. It's from the previous swing low to the previous swing high, and it goes down to the 618 before it potentially carries on going up. Now, here are the settings. On the Fibonacci retracement tool, you have the extensions and the retracement are both built in on the same tool, and these are the settings. Now you can pause it and get the right numbers, and then you just click on play again. So these are the numbers. Make sure you get the on and off right as well, and tick that one, put a 2 here, get it all done and dusted, and then click on defaults, save current settings, and click OK. Alright, I assume you've all done it by now, so let's carry on. Let's go into the Euro Pound and let's look at the fibs. So we go from the previous swing high to the previous swing low, and this one gave a 38.2 Fibonacci retracement level. Now we do it again from the high to the low. This one gave again another 38.2, absolutely spot on. Now let's do it again from the high to the low. This one gave, let's have a look, I can't see it. I'm gonna make it bigger. This one gave a 50 Fibonacci retracement level, which is halfway through, basically, halfway through the whole move. Okay. Now, let's see here. Okay. Right, let's go to the other ones. The what's it called? The Dow Jones and the S&P. Just gonna do the fibs quickly before we carry on. So this is what I mean with look for clarity. Okay. Look for clarity out there. And increase your reward ratio. That was the fourth one. So look for quality as well. Yeah, focus on quality and not quantity, and look for clarity, and obviously increase your reward ratio by going for nice big moves there. You're gonna catch the full phase one going up. So you should go for like 2 to 1s, 3 to 1s. Yeah, and if you're doing end of day, I suggest to trade with no target. ideally with no target because the sky is the limit and it can just go and go and go and go and go. In that case, you're just gonna maximize it all the way. Right, so let's do the Fibs. I'm gonna go from the previous swing low to the previous swing high, stretch the lines. There we go, 38.2. Again, there it is. From the previous swing low to the previous swing high, down to the 38.2 before it potentially carries on going up. That's cool. Next one, from the low to the high, and now here we get the 78.6, which is the last Fibonacci retracement level. Okay, just doing retracements for now. Next one, from the low to the high, 78.6 once again. And it's also a 618 as well because it never closed below. So it is coming back down from the previous swing low to the previous swing high. It's coming back down. It breaks through, even the 50 is qualified too, because it breaks through the 50, but it comes back up and closes on the 50 or above the 50, so it's qualified. And this one is qualified too, 618, and even the 78.6 is qualified too because it also touched it and it never closed below, so it's qualified. Now for the next one, assuming that that is a swing high, which is pretty unexpected because this is likely to carry on going up. It's very, very unlikely to. I mean, hard to guess. It's a very hard guess to assume that that is going to be the swing high, right? Right. So that's a swing. That's definitely a swing low. That won't change. And as it is now, that's a swing high. So if it pulls back down to the 618, that'll be pretty much spot on with the trend line and also the 20 moving average as well. And that is called confluence of levels, yeah, clusters of levels, which is very powerful. Let's have a look at the Fibonacci extension levels. As I said, everything is built in on the Fibonacci retracement tool. So just go into the Fibonacci retracement tool once again, and we're gonna go from the high to the low. So now it's the other way around. Now let me make it easier, and I'm gonna go back to that date. There we go. So that's exactly how it was on that date. So we're looking at the from the previous swing high to the previous swing low to measure the extension against the retracement. So the ones that are qualified are all above 1, which are the 1.2, 1.6, and 2. These are the Fibonacci extension levels: 1.2, 1.6, and 2. So it's A, B, and C. The only three options for the Fibonacci extensions. Because this is a historical high, so sky is the limit. There's nothing else to measure it with. There are no horizontals. There's nothing there, basically. So that's when you use your Fibonacci extension levels. So that's broken through the 1.272. The 1.6 didn't touch, hasn't touched just yet. It could potentially give you a high test bar tomorrow of the 1.6, or maybe even the 2, which is twice as much than from here to here. So as it is now, just, I mean, there's nothing you can do. Sorry, which day is that? Oh, that wasn't the, yeah. Oh, actually, the pattern looks quite similar. No, that's not today, sorry. We're actually doing back testing. That was a previous cycle there. And it's broken through the 1.2. And then it retraced, so that was never qualified. Now we go forward, 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 forward. Right, okay. Right, this is now happening live now. Actually, I thought it was that one, but yeah, it looks very, very similar, to be honest. It's just that is that beautiful that it just looks pretty much identical. That's how predictable it is, which is good. It's a good sign. Um, let's go onto this one here. So we go from the previous swing high to the previous swing low, and have a look. Is that kissing the 1.272? Well, not quite, because it hasn't touched. It has to touch the 1.272 for it to be qualified. Yeah. So it's from the previous swing high to the most recent swing low, and then off it goes towards the 1.272. And It hasn't touched just yet. It could potentially touch by the time the market um, closes tonight at 9 o'clock p.m. as is the US market. Fine. So there were a few Fibonacci retracement levels and one Fibonacci extension here that was qualified. Let's go to something else. Pound Swiss. This is the opposite as the Euro Pound. Beautiful, giving high highs and high lows. These are bullish engulfing bar. Bouncing. Well, this one was bouncing on the 20-minute average. Pushing up. Let's do some pips in here. Now we go for the most recent swing low to the swing high. That's giving a 38.2. Yeah, from the low to the high, 38.2. Here is qualified. Next one, from the low to the high. This one is giving a 50 pip retracement level. From the low to the high, it pulls back half of it before it goes up again. And that gave a beautiful doji bar. So it gave a, well, like a sell bar bouncing on the 20. Bullish bar, came back down, is an inside bar. Didn't trigger it on the next day, gave a doji bar of the 20 again, and the 50 Fibonacci retracement level once again, and then it triggers on the next day and it takes off. And then it puts a new high up there. Now let's go to the next one. Previous swing low to the previous swing high, and that is giving a 618 Fibonacci retracement level. There it is. From the previous swing low to the previous swing high, it pulls back down to the 618 before it takes off. And the 618, by the way, is known as the magic rejection level. It's a very powerful Fibonacci retracement level. It doesn't mean that the other levels are not powerful as well. They're certainly qualified, but for some reason the 618 is the magic rejection level, and as it is a decent pullback in relation to the extension. So it is a nice decent pullback. The 78.6 it also is also it's a nice pullback, but it's gone down quite a fair amount of pips. The 618 is, again is very powerful. They're all equally qualified, to be honest. 50 is halfway through, and the 38 is normally a tiny pullback. Okay, like that one there. Let me show you again. So from the low to the high, that is a 38 too. So it's up in relation to this. Well, basically what it means, it has retraced 38% in relation to this move. So this section here is 38% of this section here. So this section here is 100%, and this is 38% of this. Okay, that's the reason behind it, or the logic behind it. Right, so now some Fibonacci extensions. Let's go on to, now is from the high to the low to make sure the extension. Those closes, have a look. Yep. Right. Okay. Now do the step-by-step process. So just see whether it's qualified or not. See. Best thing to do is to go to your charts. You can pause it, go to your charts, and go to this cycle here and pick this high here on the 22nd of May. Actually, the day before my birthday, actually, 23rd of May. So from this cycle here down to this swing low down here, right? So from this high to this low, do the extension and then see whether this swing high here bounced on any Fibonacci extension level. And you have three options: the 1.2, the 1.6, and the 2. From the swing high to the swing low, you're measuring the extension against the retracement, so it's the other way around. And right, just wait a few seconds. Cool. So the answer is yes. It is qualified from the high to the low, and this one is bouncing off the 2.0 Fibonacci extension level, which is basically twice as much. It's actually double or twice as much. Yeah. So that's 1 to 0. and that's 1 to 2, so it's twice as much. Great. So that's a Fibonacci extension level that is qualified on the 2.0. Let's have a look at the next one. This looks to me that is the 1.2. Let's have a look from the high to the low. Yeah, 1.2, bingo. So from the previous swing high to the previous swing low, actually, this has to be absolutely spot on. It has to go there. Oh, yes, it is qualified. Um, let's go back to make it easier. There. So you go from the previous swing high to the previous swing low, and it shoots up, and it goes to up to the 1.2, which is qualified, and breakthrough, but it pulls back down and closes on the line, so it's spot on. Then the next day gives another bar that also breakthrough, but it comes back down and closes well below it. Well below. Sorry, it doesn't matter how far it goes past it. That doesn't matter. It has to basically touch one of the fib levels and close on the line itself or below the line for it to be qualified. So that's where we are now. We go forward. I can do it again. From the previous swing high to the previous swing low. And it's about getting very close to the 1.272 Fibonacci extension level, which is the first option, option A. So it's from the high to the low, and it's going towards it. And these are the three options: so option A, option B, or option C. Okay, I'm looking at these three: 1, 2, 3, or 1, 2, and 3. Yeah, right. 1.2, 1.6, and 2. These are the only ones that are qualified for the Fibonacci extension level, and they're all built in on this tool, on the Fibonacci retracement. They're all built in here. All the numbers, all these numbers here, they're all built in and saved in here in this tool. Great. So that was well in detail. I hope you guys enjoyed that. Um, so this is what basically this is what you have to do for the fibs. Have to look for clarity overall, then do some fibs. See whether the price is bouncing or not off the moving averages, look for price action, look for convergence, divergence, look at the weekly chart, see what's happening on the weekly, go back to the daily chart again. Right, so let's look at something else. Banyan, yes, these are a very nice one. Beautiful banyan, here we go. So we, oh, just do it nicely. Here we go. So this pushing up like that. Right, so this is giving high highs and high lows here. Now, make sure you get a bigger picture as well, so just go back and see what's happening there. Make it bigger again. Now, that's horizontal, that's bouncing there, here, and it's also bouncing here. It's giving higher highs and higher lows. EMAs are in order, is bullish. I gave an inside bar and it's now kicking off nicely. So we're expecting is another phase one, another phase two, and another phase one, and another phase two. Yep. So these are just pretty amazing pattern here. It's retesting the level, which is beautiful. So resistance is becoming support. It's absolutely beautiful. Now pause this chart and then just spend some time on it, just analyzing it, and then you can go on to your one and then get it done, and then compare it, and then you can play it back again. It's a bit of an exercise you can do, which helps. I'm gonna go on to another one, something that is not looking very promising. The Aussie. I'm looking at this trade here. the inside bar there was giving high highs and high lows, pushing up. This level actually goes here. It's bouncing there, it's bouncing here, was bouncing here, and it bounced there again. Came back down. Didn't quite break through the previous low, but it's just very weak. So it came back up to retest this level here, came back down. It's giving a lotus bar here, but this high failed, and it's not giving high highs there. Here was giving divergence, yeah. But if you're looking at the bigger cycles here, it was giving convergence. So if it, again, if it's not clear, leave it alone. Yeah, if it's something that's not clear, that here, you know, by looking at these two highs which are not clear on the first place, it's giving divergence, and by looking at this one, it's giving convergence. So if in doubt, leave it alone. Okay. So also this is the asset trainer there, which we shall see whether it's gonna break through tonight or not. A nice trend here. This is giving a bit of an ascending triangle. This is coming of it. It's just not clear anyway. So leave this alone. Look for clarity like all the other trades, like the pound yen, pound Swiss, euro pound, Dow Jones, S&P. Those are that's proper clarity. It's just something clear that you have to look for when you trade. The clearer, the better. And remember that less is more. Okay, so I'm gonna leave it there for now. I'm gonna upload it quickly, and I'll see you all guys. I see you all very soon. Cheers there, and bye now.